I have never watched any of those before. So like, do they come out with questions, or do they just free rein it?
I don't know. That's why we have to try. If not, we'll never figure it out.
Hi friends! As you can probably tell, Erin and I are starting a new series here on our YouTube channel where we eat snacks and have unscripted, casual conversations about topics that we are passionate about, like personal finance, investing, trading, entrepreneurship.
Join us for a blend of light-hearted conversations and deep dives into things that fascinate us, ranging from philosophical to technical and sometimes even comical. I could already see that coming. So think of this series as us inviting you into our home for a hangout. Grab a snack, get comfortable, and join us as we chat about investing for beginners today. Also, we have yet to come up with a name for this series, so if you have any suggestions, please leave them down below.
Let's get started.
Investing as a fresh grad, because I just graduated, and I thought it would be a very interesting topic to talk about, and we just wrote scripts on it.
We just wrote?
Yeah,
I wrote! Yeah, you edited, I wrote.
so it's together.
I wrote, you edited.
So it's together.
Yeah, I mean, I started investing only after I graduated from uni and started work.
So what were the challenges?
I think the biggest challenge is not even the money, but it is the psychological barrier to getting started. Like, I just kept procrastinating. I knew that I should be investing. I knew that I should be putting my money to good use. I knew that I shouldn't be leaving it in a bank account. But it took me a long time to get started. And for me, what made it easier was you setting it all up for me. So literally sitting there telling me what to click on, how to do it, while I'm sitting there like whining and complaining about it taking so long.
So your trick as a fresh graduate was to get an undergrad to help you.
Quality.
Pathetic.
You weren't even in university yet.
Oh really?
Maybe you were in army.
Maybe I was in army. I think army.
Yeah.
For me, as I just graduated, I think it's difficult because I have to save up. If I also want to buy a house, I also want to buy a lot of things. But it's not like silly things, but like big ticket items like house.
But it's also because you're a guy in Singapore. So you had NS and then you're like a very old graduate.
Oh, that's true.
Versus me when I just graduated, I wasn't thinking about house.
But you're still not what? No house for you. No.
I just bought a house.
No, you're not married.
But I just bought, neither are you.
I'm gonna get married before you.
I got a house before you.
So how do you buy a house?
We're using my CPF.
How do you save up so much money to afford a house?
My boyfriend and I bought it together.
Sorry, you have no boyfriend. Didn't know.
I'm single.
No, I have a fiance. I'm gonna get married.
I have a boyfriend. I'm also going to get married.
Boyfriend's never gonna propose to her.
Nope. He will already confirm.
Confirm never propose.
How come yours? How do you do it? I feel like mine is like, see the top is so like squished together that it's so hard to like
Mine
peel.
also.
No, okay.
Sarah doesn't know how to eat string cheese.
I don't. I feel this is my first time eating it. I don't even remember eating it before. Are you sure I'm the one that scolded you?
I think so.
I don't think so, because I think this is my first. I've always wanted to try string cheese, but I always thought it was like an American thing. And I've never seen it in Singapore. And I also didn't. I always thought it was like.
This is deja vu. You literally said that the last time we ate this.
And I thought it was very unhealthy. But I only recently realized that Thai protein. 7 grams of protein, in this one packet.
Oh wow.
But also 80 calories.
I'm fine with the calorie. Why are you getting fat now? Shit, I'm gonna get cancelled.
I don't know, but you're my brother, so it's fine, right?
Yeah, but this string cheese is actually quite hard to peel. Not just you. Not the best string cheese.
Well, it's so yummy.
Yeah, really yummy. Cheese is just very yummy as a whole. Like, bro, I'm thinking like, how would you want to teach someone how to invest? A fresh grad, small amounts of capital.
So what really got me into investing was reading Ramit Sethi's book. In my head, when I was younger, I always thought investing was a very active thing. Which was my biggest barrier to entry, because back then I was working. I was not interested in actively trading and having to check my portfolio every day. Like, you know how they show it in the movies and like on some investing channels and stuff like that. They're checking their investments every day. They can't sleep, they're stressed, and that's not the kind of life I wanted to live. And especially because I had a full-time job, right? And I just wasn't interested in it back then. So when I read Ramit Sethi's book, he was like, that is not the life I want you to live either. I want you to learn how to grow your money without getting stressed out about it. And in his book, he taught like a step-by-step method.
So what's the step-by-step method?
I'm getting to it. Okay, don't Step 1, be birthed into a family with a brother that knows how to So he basically taught me that there is a way to automate your investment so that you don't have to look at it every day, and that is the best way to start out. For me, for him, that's the end all be all, to be honest. That's what he teaches most people. You can stop there. But for me, that's not where I stopped at. But that was a very good jumping off point for me. It was basically step 1, figure out what to invest in. And for him, it's just broad market index funds. So S&P 500.
Why not go into individual stock?
Because you want your hand in multiple cookie jars rather than just one. Because if you're not educated enough, you won't know how to pick the
You
right
calling
stock.
me not educated?
I'm calling about myself. But I told you because I want it to be passive. I don't want it to be active, right? So I don't want to be doing research on the market. I mean, on individual stocks, I don't want to be doing. I mean, I guess I didn't mind doing research on the broad market in general, like reading general news, but I didn't want to do research on like macroeconomics, do research on a particular company that I'm not even interested in. So the S&P 500 was a way for me to put my money in the top 500 companies in the US. And the S&P 500 kicks companies that are not doing well out anyway. So you technically are always have your money in the best top 500 companies in the US. That's why he recommends the S&P 500, and I was like, you know what? Better than having my money in the bank. And it's also shown that S&P 500 grows around like what, 7 to 9%.
9 to 12%.
And so high?
Yeah.
Oh, okay, 9 to 12%.
Because in recent years, like just in the past 4 years, it really skewed it.
I thought the number, okay, I don't know, the number he used in his book was like 7 to 9%.
Yeah, that was then.
Right.
It's because of the last 4 years, the market has gone up almost double in 5 years.
Oh.
So that's about 20%. It's because of this like 20% annual that it kind of skewed things a little bit more. So it's around like 9 to 12% right now.
Okay, so even better.
Yeah, but if you were an investor in 2020, then your average is like 18%.
But yeah, so why are you touching my stuff? Who said you can eat my snacks? That was one before I was rudely Oh my.
No one interrupted you.
9 to 12%. So that's still better than leaving my money in the bank. With compounding, I am leaving millions of dollars on the table if I wait like 10 years, 5 years, whatever, as long as I procrastinated. A funny story is that I actually created a, what's it even called now? CDP account.
CDP,
And when I actually signed up, created, I don't know, opened a CDP account when I was like 19. Back then,
Well,
there were
ancient
very,
times.
yeah, we couldn't invest without a CDP account, and I went to SGX, we had to go through a course and everything. And in the end, I didn't invest at all because I was like, oh, too much work, I don't know how to do it. I can't be bothered, I'm still a student, I'm not gonna, it's fine. And then it went all the way till I graduated, and I still never started investing. But the good thing was that I procrastinated enough that the platforms became so much easier to use, so much cheaper as well.
Oh yeah, by the time you joined, you're using FSM.
Yeah.
And FSM was so much cheaper.
Yeah.
Like if you tried to do it in the past and you didn't know how to invest,
Yeah.
like you're not going to make any money from that if you're a small trader. Like
Yeah.
you cannot, impossible.
So you guys who are
Impossible.
starting now, it's also a better opportunity, because I guess back then you can't even dollar cost average. You gotta put in all your savings at one go. Otherwise, you'll be paying like a shit ton of money.
Yeah, which is why I think like, honestly, like my generation and us who are just graduating, we're at the best position right now because ever since the animal brokers came in, everything just became dirt cheap.
Animal
Like,
brokers.
$1 or $2 to trade.
And the rest are also kind of catching up. to be
Yeah, and
honest.
it's because of them. They came in and they're already pushing prices down. I think the best one was still TD Ameritrade. It was just $0, just free, but they're gone.
gone.
Yeah, I really like their platform as well. But they're gone, and thanks to the animal brokers, everything, like even the good ones as well, and the old ones like Saxo, they're also coming down. Like Mumu, Weibo, and Tiger, they're really like just squishing the market.
Yeah.
And I know there's this dolphin broker coming up as well. Another animal.
markets also just lowered their prices.
Yeah, so a lot of things are coming down. Like competition is great. Okay, so if you're just an investor and a swing trader, if you're not like actively going into and out of the market, this is the best time in the world. If you're an active trader, they are kind of slow. So if you're going to be trading like 10 ticks, 20 ticks, or like just like 0.1% every day, but then you take a 100x margin, it's very difficult because they are very slow and they sell your order to market makers. So market makers will always have an edge on you. So if
So
you
like
gauge,
Aaron forgot that this podcast is supposed to be for beginners. So I'm sorry if he sounded like he was speaking Chinese for the last 1 minute.
right, totally forgot about that. So anyway, going back to myself, I still think that right now, if you're listening and you are young like me and you're trying to get started with investing, this is the best opportunity. You're in the best opportunity in history to do so right now.
Yeah.
Maybe.
So step 1 was to find out what to invest in. S&P 500. Step 2, how often, which in my case is once a month. Ramit Sethi recommends about once a month. Once every week, once every 2 weeks, it's fine as well. It's still better, right? The shorter your time frame is, it's actually better, right? No? Yes? No? Doesn't matter.
Say again?
The shorter your time frame when it comes to dollar cost averaging, is it better?
You'll get more average result, which is, I guess, what you want, right? Average result.
So, pick a time frame. Maximum will be once a month, because once every quarter is a bit little, right?
Yeah.
And pick where to where.
Okay.
Choose which broker would be the best for you. In our experience, it will be obviously those that allows you to automate it, which is FSM, Syfe, Webull. They all have recurring savings plan, investing plan is what they call it.
Last I checked, which was quite a while ago, I haven't checked Tiger, so I can't really comment, but at least a year ago they didn't have it. Moomoo has it now. I just checked it like today, just curious, before we did the video. Yeah, so I'll just check it. They do have it. Not sure about the fees, I'm not sure about how often we can do it. I just literally saw the option, I went in, then after that I was busy, so I haven't
Jumping
really
on
seen.
call them tomorrow, right?
Yeah, I'm gonna
I'll
ask.
let you know. Aaron will ask about the fees.
Yes. We'll do the digging for you, we'll squeeze them, and ask them to give you discounts if possible, or maybe like a better sign-up bonus using our link.
We'll probably have spoken to them by the time you guys see this anyway.
Yeah, I hope. Speaking of dollar cost average, I think something that a lot of people do not know, or people do not expect is, I think what you face as well. You looked at your portfolio, it's been a couple of years, but why isn't it rising like with the markets? The market is up 30%.
Yeah.
Why am I only up 10%? Or maybe
I stormed into Aaron's room like what, a month ago?
Yeah.
I was like, showing Aaron my FSM account. I was like, it's been 4, 5, I can't remember how many years. Why is it not up the amount that I was expecting? You said 9 to 12.
Exactly. And so what you have is an average position. So if you think about the S&P 500 dropping to zero and not dropping to zero and continuously going up, she is the average of that. Because you are buying in at the top. Dollar cost averaging means that you are buying at the top. You're just buying lesser. So that means that she wouldn't earn as much. Even though the market is going up 20%, she didn't buy it at the bottom. She bought it at the top. So she only makes 2%. So, yeah, so be careful when people are trying to sell you products as well. They'll show you an example of, oh, look, it's growing at 9 to 12%. If only you invested, the best way is a dollar cost average. You will never in your life get that return. If you want to get that return, you have to time the market. And so in most cases, if you were to, let's say, all in into the market on any day of the year, you close your eyes, there is like a 60 to 70% chance you will outperform dollar cost averaging. Yes. It's kind of interesting that in like I think a 20 or 30 year period, if you were to take within that first year, you just dollar cost averaging versus you lump sum actually outperforms. And in most cases, lump sum will always outperform dollar cost averaging because you already have a huge chunk of money that you didn't invest. Dollar cost averaging spreads it out. But the reason why dollar cost averaging works is because we don't have a lump sum of money sitting around. We have income, we work, our pay comes once a month, which is why people dollar cost average, and which is why it's a good strategy. But if you have a lump sum of money, the faster you time the market and buying in at the right time, the more you will make. And the way that we time the markets is by looking at exponential or simple moving averages. That's one or two. But the way that we've been really honing in right now.
What they are technical indicators. Basically, when you want to trade, you have to open up your charts, right? Then you see like the red and the green candlesticks. They're called candlesticks, that rectangular thing with the tail and the head. So that's what you call charts. And then on charts, you can actually add on things called indicators, which are basically like graphs. So like some of them are graphs, some of them are like spikes. They are visual representations of mathematical formulas that someone smarter than us came up with that helps you figure out when to buy into the market. Technical indicators. So the things that Aaron mentioned, like the moving averages, are a type of technical indicator.
Yeah, and you can head over to TradingView, it's free, and you can actually just search simple moving average or exponential moving average, and it will appear, and you can just slap one on. And so one of the very good ones if you're trading the S&P 500 is the 50 and 100 simple moving average, and the 200 as well. I think these are usually good times to buy, and if you were to dollar cost average at those points in time, you would have beaten someone who just dollar cost averaged in general.
Yeah, but of course that's more advanced. What we want to encourage you guys to do is to start as soon as possible. So start with dollar cost averaging first. Get your money moving. It's better, like Aaron said, if you have a lump sum of money and you also have income, start dollar cost averaging your income first. Leave the lump sum for a while you are doing research on the market before you put the lump sum in.
Yeah. And if you're even more advanced,
They are not. This is a beginner's guide to investing.
I cannot help it. So we also have something called the McClellan oscillator. It is a type of technical indicator that is developed by a guy called McClellan, and we've taken it and developed it into our own strategy. Don't throw food around already. So if you look at McClellan, we develop a strategy that we use, and whenever it hits a strategy, we actually dollar cost average in and we buy in, and when we buy in, we actually make a lot of money from it. And if you follow our Telegram, you'll be able to follow that trade.
They all just stop watching.
Just a very fast plug. You can join our Telegram to see where it's at.
So, the most important thing I learned from Amit Sethi is automation. That is why we talked about choosing a broker with recurring purchases, recurring buys, recurring investment, and recurring savings plan, whatever it's called, and making sure to gyro money every single month into that account so that you don't have to look at your portfolio like ever if you want to, once a year, once a month. Amit Sethi says he looks at it once every 6 months. And he's a like millionaire, multi-millionaire. And he doesn't even look at his investments that often. So it is a good strategy for someone who's just starting out. And if you are very overwhelmed by the idea of having to pick stocks, check your portfolio, this is a very good option for you. And it's one that I keep, even as I have started picking stocks or like timing the market, things like that, I still have my dollar cost average running because that's like forced savings to me. It's money that gets taken out of my bank account without me having to do anything. So even if I'm like spending a lot of money that month, even if I want to buy something expensive, the money's already taken out of my bank account. It's already in the spot stock market. So there's a lot of things I need to do to get the money out of the stock market if I really wanted to buy something, which is never. Nothing's ever worth taking the money out of the stock market just to buy, you know? So it's really good for saving.
I might take it out to buy a house though.
But you're not dollar cost averaging.
That's true. Yeah, so
But another simple way is like what we're doing now, right?
What are we
With
doing
our
now?
money market funds.
yeah.
It's only now. It's only for like, it's only temporary.
So for a lot of people who are new to investing and they don't like the idea that they put the money to the stock market and it goes down. Like absolutely no, I don't want that. I only want it to go up. I only want up. There is a way. Sounds like a scam. Sounds like I'm gonna scam you and be like, buy
Yep.
this $600 course and your money will never go. But no, it's actually just bonds. Essentially, they're just bonds. So you are lending money.
Bots. I'm like, what? It's like, where are we going this area?
Put the money in this bond. It's basically bonds. And you're basically trying to lend money to someone. And in this case, we're going to lend money to the government. And why do you want to lend it to the government instead of someone else? Because the government can always pay you back. Because if they run out of money,
Singapore government or the US government.
all governments can. Because they will always be paying you back in their currency. And when they run out of it, they just print more.
You want to buy Burmese bonds?
Nope. Yeah, so the type of bond that you buy or which government you want to lend to is probably important. And if you're in Singapore, Singapore government's pretty good. Very good track record. Vote PAP if you don't want to lose your money. Otherwise, US government's pretty good because they print lots of money as well. And right now you're able to get about 5% from US bonds with almost no risk. Again, I wouldn't say there's no risk, but the terminology is called risk-free rate because there's very little risk when the government can just print money to pay you back. Yes, and the US government has never really defaulted on their debt before. So pretty good on that. Yeah, and I just saw it on Moomoo. I think right now you can buy the treasuries directly. Not sure. I'm going to ask them tomorrow as well. Otherwise, you can buy a money market fund, which basically gives you that return and you have almost no downside. Maybe in one day you go down by 0.01, but if not, it goes flat and then it goes up. Zero. It's an investment that you don't lose money from. It's selling a scam. No, it's not investment advice and it's not
But
really
it's only temporary for when interest rates are high.
Yes. And so when interest rates are high, it's best to not be in debt because you have to pay back a much higher interest. But because we're young, we have no debt. Now is the best time to then lend people money and make that
I have
high interest. Oh, right.
Won $1 million. But I mean, personally, I feel like right now when you want to start investing, you should still put money into the stock market. You should still dollar cost average into the S&P 500, even if you're looking to get into money market funds, because you should still set aside illiquid money for forced savings, my personal opinion. Of course, the amount you set aside might vary based off your stage of life. Like for example, Aaron needs more liquid money right now because he wants to buy a house, and he's fortunate and blessed enough to be in a family where he doesn't have to worry about supporting anyone else.
Yeah.
So he's able to focus all his spare cash on investing. For some of you guys who have more responsibility, like you're gonna buy a house or whatever, you might need more liquid cash. So I mean, figure out the percentage. For me, a good percentage has been 20%, 10 to 20 for savings straight into the S&P 500. For Aaron, it's probably like 5. But he's still invested. So all the extra money that he's saving, he probably force saves like illiquidly, or no, actually more because you trade. So maybe like 10% of his money.
I don't really keep track as well.
Yeah, maybe I would say approximately about 10% of his money is in the stock market, in stocks that he can't easily liquidate. But he also only spends like 10% of his income.
Yeah.
So everything else is in money market funds.
I mean, I think we're quite privileged as well because we are able to stay with our parents. And so right now I spend less than $500 a month. At least that's the budget I give myself.
I also stay with my parents, but I definitely do not spend $500 a month.
Yeah. So I mean, not bad. At least we do get some support in that case. But yeah, $500 a month is my budget. I've been able to keep.
You know why? Because
up.
every single snack that we've been eating this, we're drinking our favorite Nutri-Soy, and we just ate string cheese. But you know who paid for all this?
Sarah did.
Who?
Because if she doesn't pay for it, I would just never eat it. Like I would just not buy it.
But then I can't buy for myself and then not buy for him.
Yeah, because if she just buys one, I'll take half. So she's stuck. Everything half. Weebly's money also half.
Next time when he lives in his house, he'll keep seeing me there. He'll be like, why are you here? I'm like, half. Like, why are you in my kid's room?
No, you're not touching my kid. You're not even gonna know where I moved to.
Half.
Alright, so I mean, this is us in our first time trying a podcast thingy. So if you're watching this, means we edited
Decided
it
to post it.
and decided to post it. I mean, I'm not even in the proper attire. I don't even know whether this is going to go online.
We don't even know if you guys can hear us over the sound of our eating.
Yeah, so it's going to be interesting. Let's just see how this goes.
We should get a better mic. If it's a mic like this, then I can eat like that and talk like this, eat like that, talk like this. Now it's capturing all my eating.
What are we doing?
So if you see this, thanks for watching. Subscribe to learn more about finance and listen to more of Aaron's discussing ASMR.
Let's not do that.
Thanks for being here with us. Bye bye.
Bye bye.
Oh, before Aaron turns this off, do also give us suggestions for what you guys want us to talk about in our next few videos.
Bye.